Hello Internet, my name is Ryan Ingram and today we're going to be talking about how to determine rent prices. I was a little bit apprehensive about recording this video because it has almost kind of become second nature. It's a really basic thing. Once you learn how to do it, once you get a few rental properties, you're just naturally going to know these things and it's not really going to take much effort at all. But nonetheless, I'm going to give you 5 ways that I help determine rent prices when we have a property that is vacant. So the first thing that we do, which is also the coolest tool I think, is Rentometer or rentometer.com. I mentioned them in another video, the real estate investing for beginners video that I recorded, and they were nice enough to reach out to me and say, hey, would you like to be an affiliate? Of course I would. You're a tool that I use every day. So the affiliate link is below. If you want to sign up for it, which I think you should, it's a great tool that I use daily, then please use that link below. So with rentometer.com, you plug in an address, you select how many beds that property is, and it will give you a range. It looks like a fuel gauge, and it will tell you the amount of rent that other comparable properties are going for in your area. It'll allow you to select a radius, and then if you run the full report, it'll actually give you a breakdown of exactly what those properties are and what they're rented for. Now, a very underutilized section of rentometer.com is the part where you can actually list all of your own properties. So if you're an investor and you've got a portfolio of any size, really, you can go into Rentometer, you can go list your property, and you can actually input all the addresses and all of the rental prices that you're currently charging. And this will allow other investors to get a more accurate report from Rentometer. And if everybody works together to input those properties, then eventually all of the rents in that area will raise because the comparable rents will be more accurate and more beneficial to everybody. So the first thing that I do is use Rentometer. The second tool that I use is Zillow. I really like using Zillow. Unlike Rentometer, Rentometer gives you a gauge, a price range that you should charge and that others are charging and pulls comparables. Zillow doesn't give you that range. It just gives you, if you click on for rent and uncheck for sale, then that same gridded thing that you're used to looking at on Zillow, instead of displaying the housing prices, it'll display the rent prices. So even if your house is not for sale, you can do the same thing for your personal home and you can figure out how much your personal home would rent for. In Zillow, again, just like how much it says that your house is worth, sometimes it's more accurate than others, but nonetheless, I like to see it just collectively what Zillow thinks that everything should rent for. It's one of those things that when I get a bout of insomnia, I'll probably find myself on Zillow looking at rental prices in the areas that I invest using that feature. So I wouldn't use Zillow alone to attempt to determine how much I'm going to rent a property. For that matter, I wouldn't use any of these things alone, but collectively, I think all of these 5 things are going to help you figure out exactly how much you need to charge or a range that you should attempt to charge for your rental properties. So the second one is Zillow, and it's just utilizing those lot lines that Zillow offers and figuring out exactly what house should rent for what. And surprisingly, there's a lot of fluctuation between those lots on Zillow. Zillow, I think they do a decent job at accounting for the number of bedrooms, the lot size, and all of that. So it's fun to see in one particular neighborhood the lot lines that are there and the fluctuation of rental prices. The third thing that you should do to figure out rental prices is you should speak with other investors. None of us are in this alone, and we're much stronger together, especially from a wisdom knowledge base. So it's really good to keep in touch with other investors via networking meetings, Facebook. There's tons of different groups that you can get involved in there, and it's worthwhile just to put it out there, especially if you have 1 or 2 properties and you want to know the group's opinion on what you should be charging for rent. I think that's fine just to type in the Facebook group or pose that question at an actual in-person social event and figure out what kind of feedback you're going to get from other investors. And naturally, if you talk to enough other investors, then you're going to realize the longer someone has been an investor, if they're not careful, the lower their rents are going to be. A lot of times it gets uncomfortable to raise your rents on someone that's been there for 3 or 4 years, especially if you missed a year or didn't get a renewed lease at the time the lease should be renewed and you didn't raise it a few dollars. Then it's pretty awkward to approach a tenant 3-4 years later and say, okay, now we're going to raise your rent. So if you notice, just keep your eye out on that. People that are new to investing probably have closer to true market values unless the investors have taken great precautions in order to raise investors. Personally, my mentors, I know that one of them, at a bare minimum, he raises the rent about $15 per month per year. And then other investors, they just fight and scramble to get above market rents each time they turn a property by making sure that theirs is the best property on the market in that area for rent, for the number of bedrooms and the square footage and the yard size. As you're speaking with other investors, you need to figure out what everybody else does and which type of investor you want to be. I think raising at least $15 per month per year is a great start. That's something that I'm going to attempt to emulate in the future as these leases renew, because $15 isn't like you need to move. I don't think $15 a month would encourage anybody to go look for another place to live, but at the same time, it just gets people trained and used to those rent price increases, so that, let's say, something crazy happens in the economy and you have to raise all of your rents at one time, and there has to be like a $50 to $100 rental increase. Then if they're used to that $15 per year, then hopefully they would take that a little bit better. All right, so that's the third resource that I utilize to help me determine rents. Now, the fourth resource that I utilize, that's property managers. Property managers are in this day in, day out. They know exactly what other properties are going for. If they have a client that has approached them and say, hey, will you help me find a house to rent, then they are going to show their own inventory and also the inventory of other property managers or other investors. Property managers have just a plethora of information and knowledge available to them. They've physically been in a lot of these properties. They know what the market rates are. They're a phenomenal resource, and most certainly one of the first people that you should approach in order to determine your rents, especially if you already have a property manager that's contracted. If you're far off on the rental prices, then it might not be too comfortable of a conversation. There's nothing worse than having a property manager that thinks your property is overpriced, because when they're showing it to prospective tenants, then naturally, whether they want to say anything or not, just in their demeanor, in their tone, it's going to seep through that they think it's overpriced. So you definitely want to have a property manager that's on board, on the same page as you with your rent prices. But nonetheless, they're a phenomenal resource, again, because they go in and out of all of these homes that are constantly for rent. Okay, so before I stop talking about property managers, I just want to go over what I personally do. So with my property manager, I am responsible for acquiring the property, getting the property rent ready, and then once the property is rent ready, then I turn it over to the property manager. So as I am working with the contractor to get the property completely rehabbed, then we are also discussing potential rents for the property. I constantly call my property manager asking if we should add in a half bath in this area, if we should take the washer and dryer up to the main floor, and questions like this to help determine and gauge the rent prices. So what I do is, as we're rehabbing a property, I'm going through all of these other things before I talk to the property manager. We're generally around in the same ballpark by about $50 to $100. And if there's a discrepancy, if I think the property should be rented for higher, or if she thinks the property should be rented for higher, which on occasion that happens, then what we do is we put the property out for rent at the higher rate and we see how the market responds. Which brings us to the fifth thing, which is the market. Now, the market is the undisputed champ in determining your rental prices. If you rent it too low, then you're going to have it rented out within the same day. If you try and rent it for too high, then it's going to be on the market forever with no willing occupants. What my property manager and I do is, when we find ourselves in this discrepancy of this window, I think our highest window was we were about $200 off. So I thought the property could go for $1,000. She thought it should rent for somewhere around $800. So we put the property out on the market for $1,000, and crickets. A week went by, nothing. So we dropped it to $950. Another week went by, nothing. So we dropped it to $900. Another week went by, nothing. So we dropped it to $850. And finally, she was right. It rented out for $800. And when we finally posted it for $800, we had an occupant within the week. Honestly, that person reached out within that same day that it finally dropped to $800. The market is always going to respond very quickly, especially if there's a high rental demand for the property. Then if you list something for rent, then chances are it'll go within the week. Just recently, even in the midst of this crisis that we're in, we recently purchased a property on Thursday. We handed it over to property manager because it was rent ready. And then on Monday, there was already somebody moving into the property. Also, when you're looking at rents, what you're going to want to do is figure out what other properties are renting for and the condition that they're in. If you see a property that is currently rented for $800 by any of these resources, other investors tell you that they have a property rented for $800, they show you pictures, and you're like, wow, everything in my property that I'm listing for rent is newer and nicer than that, then try it. Try to go for the $825 or $850. Whenever I'm attempting to figure out rental prices, these are all of the resources that I utilize to help me just try to figure out exactly how much we should be charging for rent. And it's a lot easier to go for higher market while it's vacant than try to raise your rents up to market value while there's a tenant inside the property. So what I would highly urge you to do is do your research. Check out rentometer.com in the link below. My first affiliate. I'm a little bit proud. Comment below with what you do or what resources you utilize to figure out how much you should rent one of your properties for. So thanks for your time. I really appreciate it. If you have any other questions, comments, concerns, please let me know. I'd be happy to do a video about it and look forward to talking to you soon. Thanks.